Hello and everyone, and welcome to today's presentation on Attainable, the Massachusetts version of the ABLE account program. My name is Adam Hartwell. I'm the Director of Attainable Outreach, and it is my privilege today to talk to you about this program that I do believe makes a dramatic difference in people's lives, and I'm extraordinarily excited to share it with you. As we go through, please do ask questions. I will do my best to answer them as we go, but I will also make sure that we have plenty of time at the end to answer questions as well. All right. So that being said, I'm going to share our slides and get started. I work for the MEFA, which is the Massachusetts Educational Financing Authority. We are a state authority that was created by the Commonwealth of Massachusetts in 1982 to help families plan, save, and pay for college and reach financial goals. When the ABLE accounts were announced, we were a natural fit to be the people who could present them because they have a lot in common with the 529 College Savings Program, which is a significant portion of our mission. The Stephen Beck Jr. Achieving a Better Life Experience, or ABLE Act, amended the federal tax code in 2014 to add Section 529A. If you've heard of a 529 college savings account, that's named because that's the part of the tax code that is. 529A, it was a new section. So 529 college savings accounts are investment accounts for qualified education expenses. 529A, investment accounts for qualified disability expenses. The legislation established what we refer to as ABLE accounts. These are tax-exempt investment accounts for eligible individuals with disabilities to be used for qualified disability expenses while still keeping eligibility for federal public benefits. And I am very aware that almost every word in that statement is very loaded, and we will go into detail on all of them, I promise. MEFA works with Fidelity as our program manager. There are 49 active ABLE programs in the United States. In Massachusetts, accounts from the ABLE Act are called Attainable Savings Accounts. In almost every state, you'll find that they have a different name. Sometimes they're just called, that state's name and ABLE account. Sometimes they mix things together, like California has CalABLE. Sometimes they have separate names like the Attainable account. The Attainable Savings Plan was launched in 2017. MEFA is the state sponsor. Fidelity Investments is our program manager. Now, who is eligible for an Attainable account? Individuals are eligible for an Attainable account if the onset of disability occurred before the individual turned 26 years old. That is regardless of current age. We're talking about onset, not diagnosis, not how old you are now. We passed what is called the ABLE Age Adjustment Act a little while back, and that is going to actually change that criteria to go up to 46 years old on January 1st of the upcoming year of 2026. So, if you are 70 years old right now, but you have your disabilities onset was when you were 12, you can open an account right this instant. If you are 32 and it happened this year, you wouldn't be able to open an account right now, but you would be able to on January 2nd. An individual should be eligible to receive SSI or SSDI due to their disability, or, and I want to stress the or here because you do not need to be receiving SSI or SSDI to have an ABLE account. You need to self-certify as meeting certain requirements that generally indicate sort of a challenge to day-to-day life. It's what is often referred to as marked and severe. This requires a diagnosis with functional limitations, such as those in the Social Security Administration's Blue Book. I have put some of the categories on the right here. They include everything from skin disorders, mental health disorders, long-term cancer recovery, all sorts of things, in addition to developmental disorders, that you may also encounter, or within the Social Security Administration's compassionate allowances. Compassionate allowances are a way to quickly identify conditions that meet those standards. Here in Massachusetts, we don't actually require you to put together a self-certification form, but if you are wondering if you would qualify, one of the things that you could look into is self-certification or self-certification form language. The individual has severe medically determinable impairment that results in a marked and severe functional limitation that have lasted or can be expected to last for a continuous period of not less than 12 months and or can be expected to result in death. and not and or. Marked and severe functional limitations means limitations that meet, medically equal, or functionally equal the severity of any listing. Essentially, once again, it means that it challenges your abilities to accomplish uh, a certain level of day-to-day life. If you struggle, one of the quick glance ways that the Social Security Administration often looks at is if you're able to maintain a 40-hour work week, but it is by no means the only criteria. The individual could also be blind, whether or not they are working full time, they would qualify as well. And we have distinct definitions of what indicates blindness over just a visual impairment. Benefits of an attainable account. An attainable accounts allow an account owner or beneficiary to save above the $2,000 SSI asset limit without affecting federal benefits. One of the big challenges for a lot of individuals is that $2,000 asset limit, in that it means that it's very hard to move forward. We have not adjusted that asset limit since 1989, and we have not adjusted the disregards, the money that we count before we start counting up to that 2,000, which is often $65 because it has not changed since 1972. So those are put a very significant limit on the ability for someone to be able to remove themselves from poverty or to be able to push themselves forward in their goals and aspirations. So having a place that it is not affecting your benefits to save funds can be an enormous gift to people. Family and friends are allowed to contribute to attainable accounts. In fact, we've also partnered with giftofcollege.com. We'll actually have a little thing about that at the end, but you can buy gift cards at your local CVS now to go directly into an attainable account. Beneficiaries have relatively immediate access to funds. I put the relatively in there because these are investment accounts. So when you put in a withdrawal request, you're essentially asking them to do a small scale trade. So it can take like 24 hours for the funds to clear from your investment account over to your checking or savings account. Accounts provide individuals with financial independence and several tax benefits, and we'll go into those as well. What is a qualified disability expense? The nice thing is this is a very broad definition. It tends to indicate almost everything that's not purely recreation. Health, personal support services, including financial management, legal fees, expenses for account monitoring, any and all transportation, so whether that's public transportation or buying a car, anything like that, employment training and supports, funeral and burial expenses, assistive technology and related services. That does include augmentative communication applications, housing. I have an entire slide on housing coming up next. Education, that is tuition, that is lab fees, books, anything you need, prevention and wellness, and basic living expenses. Additionally, we actually had a clarification a couple of years ago that made sure that it was clear that all food is considered a qualified disability expense, whether that's from a restaurant, food delivery, or groceries. Food is always a qualified disability expense. Additionally, as I said, housing is a expense, which includes buying a house. If you wanted to save up in your attainable account to put a down payment for a house or a mortgage, you can also pay your property insurance that's required by the mortgage holder out of your attainable account. Rent payments, which include your first, last, and security. Real property taxes, that's property taxes on things that stay when you sell the place. So, the buildings and the land, as opposed to personal property that comes with you. Heat, fuel, gas, electricity, water, sewer, all covered. Garbage. You can pay all of those out of your attainable account. One of the ways that we've actually seen a lot of people utilizing these accounts is it provides a very clear paper trail to show that someone is paying in-kind support and maintenance. One of the things that often triggers a lot of audits is that people are asking individuals who are living with them, if they're family, to just sort of pay them back. Okay, your expenses are about $600. We'll take $600 and we'll say that you paid your share of the internet, the gas, the water, what the Social Security Administration would prefer is if that individual directly paid each of those things. So, if there are three of you in the house and the bill is $60, instead of having them pay you back 20, if they just paid the 20 themselves directly out of some account that belongs to them, that gives a nice clear line that they're paying their share of each bill. And then you doing that from an attainable account is a way that that can be done. Now, who can open an account? Naturally, the individual with the disability can open the account. It's their account. Additionally, a person with their power of attorney, their legal guardian. This would have to be a person with, you have to be a durable power of attorney, legal guardian, spouse, parent, sibling, grandparent, and rep payee. Rep payee is a relatively new addition to this list, and was put in a couple years ago. One of the big questions that I often got while I was in the community was exactly what paperwork do people need to provide. So if you're a power of attorney, it needs to be a durable power of attorney. One thing that has come up when I've been talking to families is you have to have a copy of the court document that appointed you as the guardian. And one thing that we've seen, because it wasn't required or paid attention to a lot, is that make sure that you have dates, or that this is a thing that does not expire on that paperwork, because otherwise if it doesn't have an expiration date, but it also says that it doesn't expire, then the assumption from the state essentially is that it was supposed to have an expiration date. So you need to have something on there that indicates that it doesn't expire. And that might, but that's only if you're opening it as a legal guardian. If you're a spouse, parent, sibling, grandparent, you have a family relationship, fraud protections protects the individual with the disability. You don't need to provide specific paperwork showing that relationship. Rep payees need the paperwork from the Social Security Administration giving them that designation. And again, if the rep payee is an entity or an organization, they have to do the same. I see that there is a question. I have an attainable account through Fidelity for my child, but would like to get a debit card instead of having to transfer funds from the account to a regular brokerage account and use the debit card on that account. Why does Fidelity require this? Okay, so what this person is asking about is that in some states, they have the ability to directly have a direct card directly to your account. Massachusetts does not offer that. Every state that has that also has an annual fee to pay for it. We elected, along with some other states, to, instead of having an annual fee, have there be an extra step. It was one of those choices. There is a way to essentially do the same thing, but it does have an extra step, which is what those places that have that card that goes direct do is they create a cash management account. This is all what they do sort of behind the scenes, and give you a card for a cash management account, and then transfer the money to the cash management account and utilize the card that's associated with it as a direct debit card. You can do that with Fidelity. You can open a cash management account with Fidelity and you can use their app to drop funds directly from one to the other and be able to swipe a debit card that would sort of function in that same way. There would be, again, that extra step in there. This was, again, a choice that was made as far as, do we want to have the annual fees being charged, or do we want to offer this extra service? And the decision was made, this is long before my time, that that was the direction that we were going to go. Oh, I see another question. In that scenario, it looks like I'm just withdrawing cash every time. And I also see a question, is a vacation a qualified expense? Well, you're withdrawing to cover a bill. So again, if you have the receipt for what you're paying, even if you're using the cash management account to pay it, that one step, that's sort of an acknowledged understanding that, okay, I took money out and I spent it. So if you just say, if you're keeping your receipts for as a rep payee, or in the case of an IRS audit, which we do recommend that you do, then you're just going to essentially say, yeah, I took $100 out and took out cash, but what you really did is I took $100 out to pay the electric bill. And so you could have the electric bill and the $100 and put those two together, and the maths, and people are generally on the side of things in that way. Is whether or not a vacation is a qualified account might be the number one question I get the most frequently, and the answer is no, but also yes. Unfortunately, you can't just use your attainable account directly to say, I'm going to buy a trip to Disney World. However, transportation is a qualified disability expense, and housing is a qualified disability expense. So, flight, gas, car, whatever it is that you're using to get there, where you're staying, could all be argued. If you have a goal in the person's ISP or IEP that indicates that they, have a social goal, then you might be able to have something that sort of leans in that direction. But the other thing is that if you have an attainable account, you're still allowed to have the $2,000 outside of the attainable account. So if you're putting all the bill money, all the needs money into Attainable, then the $2,000 can be your recreation fund. I can now save up to $2,000 for a vacation, for an Xbox, for whatever that's those things that don't qualify to. So it gives you the flexibility to turn that into a place to save for recreation instead of being the only place that you have to put all your money. And if you have $1,900 in expenses every month, you can't really save in there at all. So, all right, moving along. Contribution limits have increased in 2025. They've increased pretty steadily over the years. So currently they are at $19,000 if the individual is not working. If you are working for this year, at least, it might expire at the end of this year. We're hoping that they're going to pass the extension. You can actually put more money in per year in because of the Able to Work Act, which means that you can contribute the lesser of the account owner's gross income or the federal poverty guideline on top of the 19,000. So currently that's $15,060. So if a person is earning $10,000 a year at their job, they can put an extra $10,000 into Attainable. If they're earning $20,000, they can only put an additional $1,560, which means total they could put $34,060 per year into their Attainable account. You are not allowed to take advantage of that extra amount of money that you can put into your account. 19,000 you can always do, but the extra 1,560 you cannot contribute if you are participating in a retirement account from your employer. There is also legislation currently being discussed which would allow employers to put money at your request directly into an Attainable account instead of a retirement account. Now, in an Attainable account, you can have up to $100,000 in savings before it starts affecting Social Security or anything else. So instead of having the $2,000 limit, it's now a $100,000 limit. If you are not worried about SSIs, or income or asset limits or what have you, you are allowed to contribute up to $500,000 into the account. So you're allowed to keep you yourself putting money in up to $500,000. As it is an investment account and it earns a return, they can continue to grow. You're just not allowed to be adding to it yourself. Any funds in Attainable up to that 100,000 means that it will not affect your eligibility for Social Security, housing assistance like HUD, SNAP, at FAFSA, particularly if you have a sibling, you don't have to they don't have to worry about your funds impacting their ability to qualify. Medicare Parts A, B, C, or D, Medicare savings programs, extra help, Medicaid, all those things are not affected by funds in Attainable or any Able program. Here in Massachusetts, again, there's no annual account maintenance fee. That's a balance point that we were talking about earlier. And as these are investment accounts, there are investment fees that range from 0.2 to 0.86% of assets. Generally, that is much less than the return on those investments. So it ends up just being, say, if you were going to get a 6% return, you're now getting, a 5.4% return or something like that. I see that there are some more questions. So is the 19,000 considered the annual gift allowance we're allowed to gift each year? I believe so. I believe that it's in the same line as that, but I'm not 100% certain on that, but because it is the same number. So because it's the same number in my head, it seems to me that it's probably the same thing. Let's see what else we got in the questions here. Can you transfer money from special needs trust to Enable account to pay bills? Yes, actually, it's one of the best uses of it. Is you can create an automatic dispensation from a special needs trust to Enable account. And so let's say say you're doing quite well. Let's say you got, like $1 million in your special needs trust. You can have it drop, $2,000 per month into Able. And one of the great things about that is because that'll make sure that it makes it easy to do flexible spending. Say, oh, you need a little extra food this month, or the power bill is a little bit higher. You don't need to go back and say, I need more money through an attorney or something. You just have, okay, you put a little bit more than you need, and the extra money is just saved to the side until you need it for something else, and it doesn't affect anything. Able and Special Needs Trust work together as a team wonderfully. Similar to the debit card question, can the account owner get checks associated with the Able Fund to pay bills? Again, what you can do is you can have take money out of your Able account and send it to a checking account and then spend the check. And that gives a clear paper line that this came from the account to pay this bill. So there isn't a direct checking account that you can do directly to an Able account, but you can do sort of something in line with that. See here. You got a lot of questions. If Able account is nearing 100,000 limit, should I change investments in Able to sorry, I'm also interpreting everybody's use of acronyms. Money market account to avoid going over. You might want to slow that down if that's a concern. You also might consider that if you feel, once again, you also might want to look into opening a special needs trust if you've got that level of funds in Able and you want to still be utilizing the same benefits. So there's a couple different things. I'm not your financial advisor. I can't speak to your specific situation. Those are some things that you might want to look into. We can contribute up to 100,000, but if the account goes over 100,000 due to returns of the investment, that is acceptable. You're allowed to contribute up to 100,000, and that's where it starts affecting SSI. I personally wouldn't want to play with that risk, that there's a chance of a misunderstanding. So if you're really counting on the benefit funds, then if you're coming close to the 100,000, then again, you might want to look into special needs trust or another option. You might talk to a financial advisor who can speak to your specific situation about the best way that would work for your family. Is it more beneficial to contribute to a special needs trust versus an Able account, or should you do both? It depends. All these are very dependent on your individual circumstances, right? Because I can't speak to everybody's family and what's going on. I have found that they can be really good teams. What I generally say is if you have a significant amount of money, you probably want to open a special needs trust alongside an Able account. I find that Able accounts are very useful as far as giving you that ability to do flexible spending easier where you have full control over it. So I would contribute to, once again, depending on your situation, right? If you only have a couple $1,000s, then Able is going to take care of all your needs. If you think you're going to get an inheritance of $500,000, then you probably want to do a special needs trust and then use them alongside each other. It's going to be very personal. And so that's much details I want to go into it without, because I don't want to give you bad advice because I don't know your situation. Are all states using this finality account located in Mass exempt from tax earnings? You can open an Able account in any state you want. If you're living in Mass, you can open one in California. If you're living in California, you can open one in Mass. There are 3 big brokerages that are managing Able accounts across the country: Vestwell, Ascenus, and Fidelity. And yeah, all of them have the same tax benefits. The beneficiary of the account would be the individual with the disability. The question was, could you please explain who is the beneficiary of the account? I'm concerned that perhaps maybe I'm not interpreting this question quite correctly. But yeah, so the beneficiary is always the individual who is able to utilize the money themselves. You don't send it to Medicaid and then pay it out of Medicaid. It's your funds. You get to save them and use them as you need. And yes, you can move money from Able into a special needs trust, I believe. Is all right. And finally, is the CMA part of Able, or does it count as part of the $2,000? I'm pretty sure that's not part of Able. I mean, I haven't run into CMA in a while, I'll be honest about it, but I'm pretty sure that that would be counted part as the 2000. It wouldn't be counted part of Able. Who is the owner of the account, beneficiary, or one who set it up? I'm going to go stop answering questions for a minute because a lot of these questions are actually going to come up in my next couple of slides, and then I'll come back to the Q&A in just a moment after I've done that, because that specifically I know is coming up shortly. So one of the things I do like to talk about is just how I've personally always really wanted to see able accounts utilized. For people who are unaware of my background, I spent over 20 years in direct supports. That is where I come from. I'm not a finance guy who happens to be passionate about disability services. I'm a disability services guy who happen to help out with finance these days. So when I was running residential programs, when I was running employment programs and what have you, one of the things we often ran into were these things called spend downs, which is when people were getting close to that $2,000 asset limit and they needed to spend their money very quickly in order to not lose their doctor, their house, all the things that made life, feasible. And because of that, savings are discouraged, unexpected income could easily exceed the limit. We had a big hit that happened with COVID relief funds that created a lot of problems for folk. And so you had a lot of people spending money very quickly, and it has to be spent on something that doesn't retain value, so it's not an asset. So, you can't buy a really nice piece of art or something because, oh no, you own something that's worth money. It's still an asset. So you have people encouraged to spend money on things they don't need, like bedroom sets, nice curtains, a lot of Levi's, the expensive jeans, stuff like that were bought for, just try and get people under the limit. Drove makes everybody very upset because it's essentially wasting another person's money in order to make sure that they can continue to live their lives. Able makes you not have to do that because instead of doing that, you can just move those funds over to your Attainable account and use them for something you actually need. So it provides that opportunity for individuals to save for expenses without fear, and it provides a place to move funds so that the spend downs aren't necessary. It allows people to save, which is a capacity that we haven't really given people in a while, and so it's a wonderful thing that we have that now. Additionally, education is expensive, and for an individual with a disability, it's even more expensive. When you're in high school, the system is set up so that your teachers are the pass through. They get you what you need. Oh, you need this piece of equipment. We will order it for you. We will find something for you. The big difference that creates a major barrier for a lot of individuals entering college is that everything has to be self-initiated. You need to go to disability services. You need to be able to explain what you need. You need to then take whatever they give you and walk it to your professors, often by you individually yourself, and then you need to be able to explain it to your professor. If the professor doesn't follow through, you need to yourself go back to disability services and explain that that's not happening and what you do need and how that can be advocated for. All this stuff can make a lot of additional anxiety, challenge, and what have you, and that's in addition to how much more you need to be independent in your studies. So being able to ensure that you can save for not just your tuition, your textbooks, your lab fees, but also assistive technologies, one-on-one assistance, all sorts of things that maybe would just make the difference between your success or failure in that environment, again, can be a big step forward for individuals who are trying to move forward with their lives. Now, due to the SSI asset income limitations, many individuals we find limit themselves to that 20 to 25-hour work week. Now, Attainable does not fix that, but I did spend a long time in the employment world, and so one thing I do like to mention, and I've talked to some people from benefits counselors and what have you, and we believe that this is a system that might be of help to individuals. So I've tried to let people know that if someone feels like they can work more than 25, they feel like they may be able to handle a full-time job, but they've never wanted to take the try and make the attempt, because if they failed, their Social Security has now been suspended. It can take a while to get it back reactivated. They don't have any money saved because you weren't allowed to save any money. And so it was better to just keep the status quo. So one thing that a lot of people can do, if they so choose, if they feel like I can do full-time work at this job and my manager, my boss is supporting me in making that attempt, is they can take a couple months. Again, this is there's a level of privilege that people have to this if they have the ability to do this, and save up to cover their bills, in their attainable account. Again, first time you've been allowed to save, and then you can try working full time. And if it doesn't work out, you have savings to cover your expenses while you get your SSI reestablished. If it does work out, fantastic. You're working full time, and now you've got a little money put aside to cover your bills. But either way, that can be sort of a path through that particular challenge. Um, one thing that I like to note in that is that if SSI is restarted within 12 months of suspending it, and the condition that gave you SSI has not changed, you should be able to restart it without issue. Now, please, 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 again, this is ephemera. This is a thing, but I do like to let people know is like creative usage of Able. Consult a benefits counselor before you try this for yourself, because everybody's got individual circumstances, and I don't want to create a problem for anyone. But I do like to sort of encourage that thought process that there are more ways that this can be helpful than it might be even initially obvious. Now, this sort of goes directly to what we sort of already talked about in response to a question. One question we got a lot of was, is there an easier way for me to spend money out of getting the account? I get this a lot when I'm at resource events in the community. And so I encourage people, if they so choose, to open a cash management account with Fidelity at the same time as they open their Attainable account. You're still going to have to transfer funds, but you can, since it's in the same company, you don't have to wait 5 business days for things to go over to a different bank. You can just sort of drag and drop in the app, wait 24 hours for the investment to go through, and then you've got the money and you can spend it as you will. Cash management account from Fidelity has a Visa debit card, so it can be used anywhere you want. It has no ATM fees. Put an asterisk on that, because the ones that have fees in like the back of like convenience stores that are not affiliated with major companies, sometimes that does actually have a fee on it, but most of the time, I believe actually even those are reimbursable. And now you can, if you don't want to do that, you are allowed to send it to any bank you want. So you can send it to Citizens, you can send it to Bank of America, you can send anywhere your local credit union, and be able to spend it out of there. Once funds leave the account, if they are redeposited, they will count toward the annual limit. So in theory, you could take $1 and put it in the account, and then take it out and put it back in and take it out and do that 19,000 times. And with the same dollar, use up your entire contribution limit for the year. Hopefully nobody does that, but I do like to at least acknowledge it. There is an IRS rule in place that funds withdrawn for housing must be used within the same calendar month that they are withdrawn. So if you are going to pay your rent, don't take it out on the 30th and pay your rent on the 1st or what have you. Take it out on the 25th and pay it by the 1st, by the 30th. Just going to save you hassle. Again, make sure you give time for the investment trade to take place. And another question I've received in past presentations is about bonds, because people were saving money for family members with savings bonds. You can't roll a bond directly into an Able account. You do need to cash it out first before you can deposit it. Now I'm seeing that we have several more questions. Let's take a moment to answer these. My son, beneficiary, wants to use the Able account for a down payment for a small farm or house. He can do that. So he wants. I don't know if he could buy a working farm with it, but he could definitely buy the land and the house. And if there's already a barn on the property or what have you, you could definitely do that. Again, a mortgage is a qualified disability expense. If the beneficiary passes, where does the money go? I have a whole slide on that. It's my morbid slide. It's coming up. Don't worry. We'll get into it. Under the Medicaid payback provision, funds remaining in Able account upon the death of the designated beneficiary may be subject to claim by the state Medicaid program for reimbursement for benefits received after the Able account was established. That's actually going to be on the same slide about what happens after a person passes on. We'll go into that in detail as well. Can you use Able account money to help your parents purchase a new car as they transport me to from group home at a distance of 100 miles each way? If they don't live with you, probably not. If they were, coming, let's say you were buying I'll use an example, like a wheelchair van that was staying on your property. They drove to you, and then when they were driving you around, they used your car to do it. You could probably do it. There is an argument, but it would be a harder sell. Once again, at the end of the day, I don't approve anything, right? This is going to be whether or not you can justify it to the IRS. If you feel like you can make that argument to them, feel free. But in my head, it would be very hard to say I bought a car for someone else that they use to help me sometimes, unless they were exclusively using it for you. If they were also using it for themselves, then it would be harder to make that argument, at least based on what I've seen in the past. Where are there benefits counselors available to discuss an individual situation? My favorites are, I've done a lot of work with Work Without Limits. You can, just Google them up. They are running out of what's it called, the Mass Health over in Eastern Mass, but they've got a benefits counselor for each region, and they really, really know their stuff. The benefits counselors there are CWICs, which get a level of essentially clearance. So after you fill out their paperwork, they can look at your exact, like what you're receiving from SSI and why and all that kind of stuff. And they are extremely knowledgeable on the tax codes and everything. And they can tell you exactly what you need to know and answer all your questions when you set up an appointment with them. Yeah, no, I've worked with Work Without Limits now for, I think, like 12, 15 years, and really, really appreciate how well they do their work. I'm not sure what kind of Medicaid expense falls into the above situation. Once again, I'm going to go into the whole after death stuff in just a moment. I believe what you're referring to. If I'm getting it confused, I apologize. If my child has both a traditional 529 plan and an Able account, does the 529 plan count towards the means testing, or can I double up on contributions? I believe a standard 529 does actually count towards the means testing. Only Able and special needs trusts are things that are outside of that. It's kind of the reason that they were created. However, I don't know how much you have currently in the 529 plan. Again, a thing that is due to expire at the end of this year, unless it gets extended, and I hope it does. You can roll over without any fees 529 into 529A, but it is subject to the contribution limit. So you can only roll over $19,000 per year unless the individual's working on all the stuff we said before. But essentially, if you've put like 20 grand into the 529, you could roll that directly over into Able without an issue, if that's something you chose to do. Get the car titled in the beneficiary's name, add the parents as authorized drivers is a suggestion, I guess, on the driving, on buying the car for the individual. Yeah, again, if the car is titled in the beneficiary's name, if the car is stays at the residence, if the car is exclusively used for those uses, again, we're getting into a really niche question about whether or not this would qualify or not. And I don't want to advise without a lot more information. Even then, we'd probably want to talk to your financial advisor about the specifics of that. But yeah, there is a way that might work, but you definitely would want to be very careful with it and make sure all your ducks in a row and all your paperwork is very clear. Okay. Got to keep on moving here. Opening an account, pretty simple. Go to fidelity.com/able. I highly suggest you download and read the Fidelity Attainable Savings Account disclosure document. It essentially has a full page written about everything I say a sentence about. It gives you all the details and minutia. You want to decide how you allocate your funds in the account among the 9 portfolio options. This is a thing that I actually often advise people to take a look at before they start opening an account, is figuring out what because it can be a place where people get stuck. Oh, I didn't know I'd have to pick a portfolio. I don't know about portfolios. I'm not sure what I want to do. I guess I'll start over another day. I don't want you to have to do that. They are available right on that main page of fidelity.com/able. So you can look at the portfolios, decide what you want, and I'll actually also show them to you in just a moment. If you are a rep payee, the Social Security Administration requires if you're opening a new account, they didn't do this initially, that you title the ABLE account to show that the payee has a fiduciary interest in the funds and that the beneficiary owns the funds but has no access to them. So the Social Security Administration recommends that the account be titled like beneficiary's name by payee's name, rep payee, or payee's name, representative payee for beneficiary's name. So I put that in there just because I don't want to, again, I'm trying to eliminate as many challenges and pain points for everyone as I can with this presentation. Additionally, on fidelity.com/able, in case you lose everything else, you scroll down a little bit, there's a picture of a cell phone that says questions on it, and it has the two phone numbers that you see at the bottom of the screen here, 844-458-2253 and TTY 800-544-0118. Those numbers do not go to the general brokerage account at Fidelity. They go straight to the Attainable trained team. And that's very helpful because, it's again, if you just Google Fidelity and call the number, a lot of people in that organization don't know about Attainable, don't know anything about it. It's not because massive financial institution and not everybody does this program. So I do recommend that that's the number to call if you're having problems with your account. That's the number to call if you need help with walking through opening an account, if you have questions about anything that's going on with the bank account itself. I can answer questions in general about like how you might be able to use the funds or thinking about it in context of ISPs and what have you, but they're the ones who can tell you the specifics because I cannot look at your account. I will never be able to. They can help with any of those types of challenges. This and the next screen actually both show imagery of our portfolios. You can invest your attainable savings in any of these 9 professionally managed portfolios. Units are municipal fund securities. They're subject to the market. Do not, I cannot do anything about what the stock market does or does not do. What you can see here is that you are able to put your funds into any of these portfolios, and you're able to break your funds up among these portfolios should you so choose. So you don't have to put all of your money into the 40% portfolio. You can put half of your money at the 40% portfolio and half of it at the 20% portfolio. So anything like that. So you can break it down as much as you want or as little as you want. A lot of folk just sort of put it all in one place, but just so you're aware. And you're allowed to change that twice per calendar year. What we see a lot of people do with these funds is something that we often see also with our 529 programs, where people go a little bit more aggressive as they're saving funds, and as they get close to when they want to spend, they might scale back. This is if someone is not using it as just an active place to put money and spend it, in which case, any of them will kind of do. But what a lot of people do if they're thinking of it in terms of long-term savings is maybe you put it at like, one of the higher, 60%, 70%, something like that for several years. And then so that in case there's not a big crash right before you need to want to spend the money, you start, moving towards a more conservative level of fund as you get closer to when you want to save it. With our 529, you'll see this where people are maybe more aggressive up until a child is like 14, 15 years old. They scale back to like having it in like a 20% in the stock market or whatever as you're getting to 18, graduation, and needing to spend it to pay for college. A lot more information on Fidelity's website. We also have this nice picture of our sort of breakdown. Again, this just for the same information presented a different way for some, because some people are just a little more visual. We wanted to make sure we gave that opportunity for everyone to sort of look at how these portfolios balance out in between the various ways that you can spend your money. I said I was going to address something earlier to a question, and I feel like maybe we rushed it, and I want to make sure that I did. So when the accounts get open, the person who opens it is what's called the person with signature authority. So they're the person who has control over the account. The beneficiary, the individual with the disability, is always the owner of the account. So no matter what happens, they're the owner of the account. Now, the beneficiary can be both the person with signature authority and the owner of the account. And so I want to just make sure that we're clarified. But whoever the person with signature authority is, that's the person who's going to be doing withdrawals and deposits and all that kind of stuff. So sometimes that's the individual with disability, and sometimes it isn't, depending on the circumstances of each individual's life. Again, attainable accounts are eligible for direct deposit, including SSI and SSDI benefit funds. So direct deposit of a paycheck has to stay under the contribution limit of $19,000. So even though able to work means that you can put up to, it's again that 15,060 in addition because you're working. If you want to put more than 19,000 per year into your able account, you can't have your paychecks do that above 19,000. You have to start cashing out and putting it in manually. It's part of how the things were structured. I didn't do it. Don't get mad at me. Direct depositing into an attainable savings account is just like any other account. It has a routing number and an account number. Because these are investment accounts, it often, not always, but often has a different number of numbers. It won't fit in the boxes that you might be given by your boss on their form that says, this is our direct deposit form. Just be aware of that. You've talked to your human resources people. They absolutely can deposit into this account, but it just might not fit into their normal way of doing things. Direct deposit of your work income is allowed to be split up. I believe Department of Labor standards currently allow you to break it up to 5 places before your boss is allowed to get mad at you. So, like if you wanted to put half of your money in a checking account, half of it in saving, something like that, it's something you're allowed to do. You can put part of it into Attainable. SSI and SSDI have to go into a designated account. They can only go one place. So if you don't want all of it going into Attainable, all of it is going to have to go somewhere else. And then you can put part of it into Attainable at your discretion, just so you're aware of how that breaks down. If you are putting conserved benefits funds that are coming from SSI into your Attainable account and mixing them with personal accounts, make sure you keep very clear records of where each of those is coming from. There is a system that we do where you can do automatic investment, automatic payments into an Attainable account. Some of the ones that are set up are like 15 per month or 45 per quarter, but that is by no means a requirement. You can open the account with no money in it. You can put $1 in at a time. You can put $10 in at a time. You can put $10,000 in it. It's up to you. So I just want to say, while we have this ability for someone to set up regular contributions in order to encourage those accounts to work with the investments and grow, it's not anything that anybody ever has to do. Again, I'm just sort of reiterating what I said a moment ago. Payees are responsible for keeping records on how they spend or conserve their benefits. This is specifically about it when we talk about SSI in particular. So make sure you're keeping accurate records of both where you're putting it and how you're using it. So if you mix your funds, say, I've got an Attainable account, I've got $1,000 that came from SSI and $1,000 that came from grandma. The $1,000 from SSI has to be spent according to the SSI rules for spending funds, which means there are limitations on what you can use it on. So you do want to make sure you're keeping very, very clear records of where your funds are coming from. The recommendation from the Social Security Administration is rep payees should keep their records of how they're conserving and spending money for at least 2 years. When I was doing this work for many years, Quest always and other audit companies always wanted at least 3 years. So that's what I recommend. So, get an accordion folder, label one, each of those QDE categories, put the receipts in each one, and just rotate them every, you have 4 of them. And every time you get to the end of the 4th one, you take the one in the front and you can, toss that and go and move forward to the next year. If a withdrawal is made for a non-qualified disability expense, and in particular, if the funds are spent that are from the return on the investments that have no income tax on them, the account owner might be subject to those income taxes plus a 10% penalty on those earnings because you spent money that was from the investment return on something that wasn't supposed to be used for. That's where the biggest possible penalty might come from, is not from the money that you put into the account, but let's say you put $100 a month in for 20 years, so you have now, say you were in the middle of it, so let's say you got like a 6% return. So instead of $24,000, if you just put it under a mattress, you actually got a return, and there's about $42,000 in change in that account or so. That extra $20,000, if you spent that on something that's not a qualified disability expense, that would be where you'd get all the penalties. There are also some circumstances where they won't give you penalties for spending things, which would be anything that's made after the death of the beneficiary, to the state, heir, legatee. Also, if you are paying the government back because they gave you too much money, they're very nice. They won't charge you a penalty for doing that. Provided the beneficiary is the same on both accounts, we mentioned this actually a little earlier, it is allowable to transfer funds from 529 College Savings Plan into an Able account without incurring any taxes or penalties. This program is currently due to end on January 1st of 2026. It is still subject to the contribution limit, so again, that 19,000 per year. This is part of what is called the Enable Act, which is the extension that would make it permanent, that is currently being debated. If you'd like anyone to advocate for that, that's what to talk to your congressman about. The Enable Act is in voting, as it were, right now to make this, among some other things, permanent. That frankly, I hope it does pass. Personal opinion, I think it does only good things. Savers credit. Enable account owners who meet certain criteria can receive a savers credit on their federal taxes for their contributions into Able. You're eligible if you're over 18, not a full-time student, and also not claimed as a dependent. Now, I mentioned this sort of in passing before, but as long as you're spending the money in your Able account on qualified disability expense, is any growth on those investments, any return on the investments, is federal income tax free. So there's no income tax on the growth on your attainable funds. This is a system that's available through Fidelity that I just find it can be very useful for some families, which is called third-party access. The person with signature authority can give another individual a level of access to the account. We see this often with if they have a registered investment advisor. A big one is if you have a second parent who would like to be able to be utilizing, assisting with the account. Be very careful with this. It is giving access to a bank account, so it should be done with extreme care and thought. But the way that it does, you fill out a account authority form from fidelity.com, you read through it, you fill it out, you sign it, you send it in, and it gives that whatever level of access you'd like. Now, there are several levels of access. You can just give someone the ability to see the amount in the account if they're helping you with, accounting or what have you, or you can actually go all the way up to them being able to be another person who has the ability to spend out of the account. So if you also are you're starting to have another member of the family who's going to be taking over the financial responsibilities because maybe somebody is getting, moving out of that role. This might also be a way to sort of facilitate that. The exact same form, that account authority form, is how you remove that access from someone. So you get that to Fidelity as well, and that access will be removed. Again, please do this with extreme care, but it is something that can be helpful for some families as they're trying to negotiate being able to access and being able to utilize funds to the best of an individual's benefit. Now, this is the screen that we talked about before. This is our morbid screen. The beneficiary or the person with signature authority can assign a successor beneficiary in the event of the individual's death who will receive the account balance in their own attainable account after all account actions have been completed. They can also assign someone to receive the funds as part of their estate in the event of their death who receive the account balance after all account actions have been completed. If they're being given to someone who does not qualify for an attainable account, naturally they're going to have to be removed from this program as part of that before they're received, because you cannot have an able account if you don't qualify for an able account. Now, after the death of the beneficiary, what happens is the account is restricted for 12 months. It's in many ways frozen, with the exception of being able to spend any outstanding qualified disability expenses. Remember, all funeral costs, all burial costs, everything like that is something that you, if someone was in the hospital beforehand, all their medical expenses, all of that can be paid out of Attainable before anything else happens. After that's done, then this is where the Medicaid recapture from any state wherein the beneficiary has lived is allowed to occur. What I can tell you is that first off, though part of this might be just these accounts are still so new, but we have not been seeing them do it very much. It is something they are allowed to do, but it is not something that we're seeing them do a lot. And it's going to be essentially they're trying to recapture part of the benefit funds. So they won't be trying to recapture your personal funds that were put in there, but they'll be recapturing any SSI income that was saved and what have you. And they will be doing that for any. The other thing that we've had is some people who've looked over the documentation, whatever, have seen indications that if there's less than 25,000 in the account after, once again, you've done all those other things, pay for the funeral, the burial, and all those things, that they aren't going to bother. I cannot say if that is true, but there is some indication in that way. I'm just making sure that I'm giving you all the information that I have. For the vast majority of people that I've served, there is a significant unlikelihood that someone has tens of thousands of dollars in these accounts, wherein this is actually going to even be an issue. Most of the time, paying off the hospital and the funeral and the burial expenses and all that, that's going to probably wipe out most of those funds. But it is absolutely the scariest sentence in the entire presentation. I acknowledge it. And so that is sort of part of the program as well. So, if you're seeing that someone is heading in that direction and there's something you can be concerned about, then you might want to be, using their funds in a more aggressive manner before that takes place. I see 2 questions in the Q&A. Sorry, who is the payee and the account title? The person with in the account title. More this might have come through on a different page, but a payee in this instance is we're talking about a representative payee. So a payee would be a rep payee is a role that can be given through the Social Security Administration as a person who is in charge of spending a person's benefit funds. A lot of times it's an organization, sometimes it's an individual. So if a person is receiving funds from, say, SSI, this is the person who's in charge of making sure they're being utilized to pay for someone's food and, their needs and what have you. Are annual contribution limits based on calendar year or on anniversary date of your ABLE fund? Calendar year. So everything is done by calendar year. It's also how generally, like I said, last several Januaries, we've seen the contribution limit raised. And that might happen again this year. We'll see. All right. I did mention before that we have teamed up with Gift of College. So it's a great way of using, but the thing of it is that in some CVS's you'll still see a card that looks like this one where it says MEFA U Fund. We actually have new cards coming out that also do have Attainable listed directly on the card as well, but anything that goes into a 529 account can go into a 529A account. So you can buy one of these cards that goes into the U Fund and use it as a way to directly contribute into someone's Attainable account. And the value in that is that nobody's ever holding an asset. That's like, I gave him cash and then he put it into his Attainable account. For a brief moment, he was holding that cash, and that might create an issue when we're talking again about those asset limits. So the fact that this is funds that go directly into ABLE can be very helpful. If you go to giftofcollege.com, you can actually do this directly online as well. They have online gift cards that you can send. You can send them anywhere in the country to anyone you'd like. And they have a whole page about utilizing ABLE accounts and working with them and what have you. So it can be very helpful in that way. There are a lot of resources out there. Of course, please feel free to come check us out over at mefa.org/attainable. We try to put webinars up on our website as often as possible, as well as articles and any information that we think will be helpful to you. We do that also on our social media. The ABLE National Resource Center is a fantastic resource. They, of course, are the countrywide version. So they have a lot of information that is very general, but they get people directly from former IRS agents and what have you to do presentations with them and what have you. Naturally, fidelity.com/able, you can get into the details of Fidelity's program. Social Security Administration, some people think that we should be adversarial, but they actually really love this program because if people are utilizing it, they don't have to try and chase people down to do spend downs. And also, most of the people I've worked with over there got into that work because they wanted to do good things. And so telling people they have to do spend downs makes them upset. So the fact that there's an option for them not to have to do that actually makes them happy. And we also do have an email sign up at mefa.org/able-registration-form, which we will send information as we learn it that might assist someone if there's like news about ABLE on a national or a state level that we can provide you. We are also all over social media. Please feel to come and find us, share with us, talk with us as you will. And you can also reach out via phone or email, attainable@mefa.org. I will be the one who answers those. So please feel free to send them right at me if you have questions you think about later. And you can also give us a call, leave us a message, and we'll get back to you as fast as we can. All that being said, I'm going to stop the share and I'm going to open up the Q&A. Great job. Thank you for your time today. My true and honest pleasure. We came in right over the hour limit with all the questions as we answered through. If you have a last couple questions, I'm happy to try and get to them real quick. I don't want to go too much over time. I know a lot of people have things that they need to do. But if there's any last things that I can answer, I'm happy to do so before we go for the day. Attainable@mefa.org is the email. It's probably the easiest way to ask questions if you'd like, unless you're asking questions again for directly to the to Fidelity, which you want to probably utilize Fidelity's phone number, which is 844-458-2253. 844-458-2253. That's the number to go Fidelity. Yeah. Yes, we will be circulating the slide deck. We'll make sure that we send that out to everyone, make sure everybody gets all the information they need. Thank you so much. Some said they learn something new every time. We do the best we can. I appreciate that it works for you. Thank you, everyone who's just saying thank yous in the chat. I really appreciate it. It's very kind of you. Explain the relationship between rep payee and account used to pay bills. So this is a little outside this, but I'll try and sort of give the guidelines as it were. The rep payee is the person who's supposed to utilize a person's conserved funds to pay bills, right? So they're the person who's in charge of how you spend your SSI. So that person also is allowed to be a person who can open an ABLE account on someone's behalf and might be able to put some of those funds into ABLE in order to save them for future bills. So it can be a way that a person who is a rep payee is able to save for future bills without impacting the asset limit that the person is currently living with. All right. Do we have any other last questions before we go for the day? Looks like no. I appreciate each and every one of you. Thank you so much for being here with us. And we look forward to answering any further questions you might have in the future. Please feel free to reach out to us. Also, keep an eye out. MEFA has started 2 years ago to host an annual disability finance conference. It's usually at the sort of in the November, December area. We should be announcing that in the next month or so when we get that date locked down, where we have people from Work Without Limits talking about SSI and SSDI. We have special needs trust experts. We talk about ABLE. We have people from Fidelity to come in and talk about wealth management. We usually have someone from the college system come in and talk about utilizing your funds in ABLE in order to accommodate and work with accommodations in the college thing. So seek that out as well. And we look forward to working with you in the future. Hope everybody has a wonderful day.